How are you guys? How are you? How are you doing? I hope you're doing well. Welcome back to my channel. This is Shocks and this is Shocks FX Capital YouTube channel. So guys, today we want to talk about M's and W's, the right way of trading the M patterns and the W patterns. These patterns are very popular in the forex market, but a lot of you guys and a lot of us don't know how to trade this properly. So today I am here to show you how to trade the M's and W's properly. So what guys you need to identify the point of interest. Number one, you need to be at a specific or at a significant high. That can be a daily high, a weekly high, a monthly high, for you to spot the high probability setups. And you need a very good broker. So I have a link in the description down below for a very good one, so that you can trade these M's and W's without a hassle. So guys, we are starting with the types of M's and W's which we can find in the forex market. Then we'll talk about the types of entries that we can use on the different types of M's and W's. So guys, if you are new to this channel, we talk about smart money concepts, ICT, and institutional trading. So welcome, and don't forget to subscribe. Click that notification bell icon so that you don't miss any content from this channel. So guys, let's get right into it. Types of M's and W's. We have types where we are saying this M is different from this M because of this distinctive characters. So what we are saying is, number one, we have what we call an equal leg M, where we are saying the legs of an M are equal, meaning they form what we call a double top equal highs. That is the M that looks like this, which this is also a variation of an M which you can find on your charts, that is called a multi-session M, but we'll talk about that later in the video. So number two, we are going to talk about the stop hand M, right? So the stop hand M is an M that looks like the first leg is lower than the second leg, but the second leg gave me out a pin. So if you look at this area, you see what you are seeing here. If you look at this first leg is lower than the second leg, but the second leg is looking like it threw a pin on top of on top of this high, meaning it didn't have a lot of activity on top of of the first leg high. So what we are saying is this is a liquidity grade on top of this one, on top of this high. So that's making a stop hand M. So those are the types which we have, or which we want to consider. Those are not the only types, but those are high probability types of M's which you should be focusing on as a trader who is looking for consistency and profitability in the forex market. So first of all, we are starting with the equal leg M. How do you trade the equal leg M, as you see here? So we're just considering this as an equal leg M, and we are going deep into how you can trade this type of an M. So with the time frame, you can use any time frame to trade this M. So number one, we are on the M30 here. You can even go to M5, you can even go to M15, M30, H1, H4. Any time frame you can trade these M's and W's. So entry pattern number one, which you should know or which you should be using. Okay, let's use this. This is that variation which we were talking about, where we are having a stop hand. So you see, these M's and W's are anywhere on the chart. We can find them anywhere. So let's look at this example. Number one, equal leg M. How do you trade? So there are two types of entry methods which you can use. There are three actually. So number one, we are looking for what we call a confirmation after anticipation. What does that mean? Okay, so if we have a first leg like this, what are we saying? Let's say we have a first leg, then we have a break of structure here, then we have this high. So if you mark this high, we are saying we are anticipating an M. Let's say you are at a very interesting point, a point of interest, where we are saying we have maybe a resistance or a support, then we have a break of structure to the downside. Let's say we have a resistance, we have a break of structure to the downside, and you are expecting an M to print on that point of interest. So if you see one leg, you say you are anticipating the second leg. So that is what we say and confirmation after anticipation. You can only use this type of entry after you anticipate an M or a W formation. Right now we're explaining an M, but you can just flip the pattern and what a W. So what you are saying is you anticipate the second leg occurring in this area. When this happens, right, so we'll be having a bullish candle here. Then if you see a bearish candle printing after this retest of a high, you know we have a confirmation, and you can enter after that. You see what we are having here. This is the first leg, right? When this is retested, right, as a zone, right, we see this bearish candle. When this bearish candle prints, that is your confirmation. But this is only used after what? After you anticipate an M or a W pattern. So your entry is going to be here, and your stop loss is going to be under the structure. So that's what you are looking for, and that's what you are doing, right? You can even look at this. What do you see there? Confirmation, red candle. That's where you are getting. So here the red candle is not the confirmation. The confirmation is the blue one. Why? Because you are going up. So this blue is your what? Is your confirmation after anticipating a W, and you are looking at that and you are buying right there. Okay, let's look at this pattern again, this M formation, right? What do you see? Okay, here, what do you see? You see first leg. Okay, first of all, it's interesting because it has a consolidation here. If it has this, then it's a high probability M or W. So breakout, right? Then you have first leg, you anticipate the second leg. So first leg, what do you have? You have break of structure here. Then you have price moving back to the what? To the original what? To the first high. When this happens, you are anticipating a second leg. So when the confirmation candle, this red candle prints, your entry is here. The stop loss goes above, and look at what you are doing and what you are looking at. So that's entry number one, using using the M and W pattern. Then number two, we are doing what we call a neck entry formation, right? What we are doing is we are looking at the neckline of the M, and we are using that to frame our entries, right? So what we are doing is this is our neckline, right, where this breaks, right? So we're looking at a retest of this, but we know better. We don't use that as our entry. You understand, right? If you have been following this channel, you know there is no such entry as a break and retest. I did a break and retest video before where I explained to you guys that you don't have to press your entries or to execute your entries at the neckline, but you have to wait for price to go beyond the neckline and retest an order block like this. So this is your entry number two, your entry pattern number two, using the M's and W. Let's say you are not that aggressive, you are a conservative trader, and you want to see confirmations everywhere. You will be looking at this point, and you will be looking to take your trades at that particular point. This is what we call a neckline entry, but it's just a name, it's not a neckline. You are looking for a break and retest of an order block. You understand? I think you got that. And let's say if you didn't want to get this here, what were you looking for? You were looking for an order block retest in this area like this. So that same candle, you can use it as an order block, and you will be looking at this end. These are numerous ways of looking and trading the M and W pattern, very popular in the forex market. So let's look at this one. So this one is what we call a multi-session M. So we have first leg the previous day, then you have this second leg the next day. So this is a multi-session or a multi-day M pattern. So the secret about this is you have to have first leg, right? Then you have to have this consolidation, then another leg. Then you will be taking your entries here as if this is the second leg of an M, of a proper M that we have been explaining in the previous videos, right? So if this prints an M, you will treat it as an M formation, but you can enter this on the first leg. This is the only time which you can use the first leg to enter your trades. Get that? Thank you. So that's what we are doing. Then number 3, we have an entry that we call an aggressive entry. What is an aggressive entry? We were saying this is a confirmation after anticipation. So an aggressive entry also requires you to anticipate, to project, right? To predict what is going to happen. So let's say you project and say you are waiting for a second leg right here. You can use an aggressive entry on a bullish candle, right? If you want to sell, right? If you want to sell, you enter on a bullish candle. As soon as it touches the high, that's where you are pressing your entries. As soon as it touches your low, bearish candle, you are pressing. So what does that mean? It means if you are expecting price to retest this area, what are you doing? This red candle is going to be what? This red candle is going to be full red, and you are pressing it is red, right? Because you know it's going to what? You know, or you anticipated what a retest, and your stop loss is going to be very, 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 very juicy. You understand? So you are going to execute as this candle is full red. Then you're going to enter. That's why it's called an aggressive entry. So this is where you will be getting those sniper entry screenshots from Instagram, left, right, and center, because that's how they are entering this trade. Most of you like this because most of the times, if you are correct, please note, if you are correct, it's going to be a 0 DD trade, 0 drawdown. So that's what you are doing, and this is how you can be looking at the M's and W's by trading. And the other thing, guys, you can't be trading any M and W you find. You will be looking at what? At the points of interest that matter and trading those M's and W's. Let's look at this chart. Let's analyze real quick. Okay, we have this high, right? Then we have this high. We have this high. Then we have this high. So what are we doing? First, we are looking at what market structure. Where is it going? It's going down. So where is our point of interest? This order block is our point of interest. What are we looking for in the lower time frame? If we go to lower time frame, I will show you what we will be looking at if we want to trade the M's and W's. We are looking at a move like this, right? Then a first leg lock. After that, we are looking and we are anticipating a second leg, and this is how we're trading the M's and W's, right? Go into your zone, retest, and form an M. You are, guys, it's been wonderful. This is what I had for you. I hope you got something, and don't forget to trade what you see. And this is some of the things you should be seeing as a forex trader. I'm out.